Harvey. This could be one of my new favorite AI companies. If you're not familiar, Harvey does legal AI, right? So I call these guys like an AI app. They sit on top of OpenAI, Anthropic, and a few others, and primarily service people in the legal industry, law firms. They just did a new round, $5 billion valuation, $250 million. Kleiner Perkins led, Coatue, and Sequoia as well. $75 million in run rate revenue as of April of 2025. Goldman had this crazy stat. They said something like 40 to 45% of all legal services will be automated with AI. So, Clint, I'm going to start with you, bud, because I think you and I are like-minded on this. Do you use AI for any of your legal functions today, or like maybe like a first pass? I think I've heard you say something like this in the past.
No, use it all the time. I think this is one of the most disruptive use cases for AI, and I absolutely am here for it. No offense to all my great attorney friends out there. I think ultimately you're just going to have to become a strategist, but yeah, it's fantastic. I mean, what used to, I was going over this the other day for an investor. We were doing an agreement for a revenue share, and typically I'd have to, get the attorney to do it, answer a bunch of questions, do a couple calls. It would be like $8,000 top end to do this agreement. I had ChatGPT Pro drafted. It took me about an hour to like prompt it correctly and put all the stuff in there, but after I did it, it crafted an agreement. I sent it to the attorney. The attorney said, yeah, this is good to go on my end. So I sent it to him for a 1 hour review of the agreement, and then sent it to the client, had it execute, or the referral party had it executed. That cost me an hour's worth of work on my end and an hour's worth of attorney fees, when it would have cost me, like I said, close to $8,000 on the top end. Yeah.
Plus, it probably got done faster, right?
Yeah, it's faster. I mean, I turn it around in a day, and so now I use it all the time for stuff like that. I send my attorneys have just become, people quality control review essentially, just to make sure it's not, because it's not the system's not perfect. You got to spend a lot of time making sure you're letting know what applicable law, your jurisdiction, et cetera, getting the company names right. Like, there's a lot you got to put in there. But the pro version's been fantastic in terms of what it comes back with the questions, what clauses you want to include, not include. So I'm here for it. I think this is fantastic. I think Harvey is awesome because it's and it goes back to what you've been saying a long time, is these kind of application layer on AI.
Yeah.
I think this is, I'm here for it. This is awesome.
Okay. So Nick, I'm sure so to Clint's point, like, I don't think you can fully outsource your legal services to an AI quite yet, right? But I have to imagine like a law firm's billable hours are going to start to be impacted by these types of solutions. Like they were noted in a couple of the announcements and articles that were out about this Harvey raise, that they were selling these Harvey to home office or in-house counsel at companies, right? So, I mean, that makes sense, don't you think? I mean, like, why would you outsource something to a third-party counsel, outside counsel, if you could just use an AI and maybe get some of that workload done yourself in-house?
Yeah, I think it's super powerful. I mean, especially as time goes on, it gets better and better, right? Because if you know that there are certain clauses that you can stomach or don't want to, or, there's a contract that comes inbound that's going to conflict with a new contract that maybe if you have external counsel they won't know about, this can all be factored in. And I think this is where it gets really sticky, for ARR purposes. You're going to have to really, really be thoughtful if you wanted to unwind it, if you wanted to get rid of it and start with a brand new lawyer who has to learn everything. And that's
a good point.
To like why it's grown like wildfire. So just their primary rounds, I'll kick them off because I wrote them down. Second quarter 2023, they did their A at 93 million. Fourth quarter same year, their B at 715 million. Third quarter 2024, 1.5 Series C. First quarter 2025, 3 billion, and now the 5 billion. That is incredibly quick. And then because we we'd like to comment from PM Insight's perspective on the secondary market and the balancing act between the primary. The speed at which that's grown, the secondary market has really not kept up. So usually there's that symbiotic relationship, but
right.
You just saw that launch. We were still pricing it a fair bit lower for the C and the D, and now we're still trying to catch up to what the new round is. So
right.
I would say the explosive growth on this is it's growing at in excess of 100% because it's already going 50% from the start of this year, and it's just growing off big numbers. I mean, it's kicking off a lot of revenue. And yeah, if I was already a subscriber, I would definitely not be able to walk away from it. It's
yeah. Okay, so staying power,
huge ROI.
Yeah, big business staying power looks like it's growing. So Evan, let's do like you and me thought experiment here, right, man? So we have Cohen and Dillon LLP. We're partners at a law firm, right? This thing shows up. AI shows up. Like, what do we do? We're a 100-year-old law firm. We're in New York City. We're one of the top law firms in the world, right? What do you do with this? Like, how do you flex or shift or adjust?
Look, there's a lot to consider. One, like we've seen an aggressive raise billable hours and prices for lawyers over the last 5 years. So I think that there's already been some sort of element where, certain firms are getting very expensive, and sometimes there's not enough demand to meet that supply. At the end of the day, there's a broad spectrum of how people can utilize legal services. There's small little pieces here, like, small contracts, business contracts, maybe some like HR employment law. And then there's like really big contracts where you're like, an S1 or something like that, or a really big deal that could be multi-billion dollars. And I think for us as a financial services firm here in New York, as a law firm in New York, ideally servicing financial services, the brand is still very important, right? Like if you're looking at a PPM, a private placement memorandum, you want to know what law firm is on there before you invest if you're an LP. You want to know the outside counsel who's working with the firm to make sure the docs are right.
Correct.
So I think there's still a very important element of brand. But from an AI perspective, I absolutely think that we as a firm should embrace AI and figure out a way to make us more efficient, so that we can at least take our time, make sure the quality of service that we're delivering is good, and make sure that our clients are still happy. What we haven't talked about here, Harvey it's like a more B2B legal play. Like it's for law firms, it's for legal professionals. The way that Clint used AI is the way I think it should be used from a legal perspective, is like direct to consumer. Like I'm not a legal expert. I want to understand a contract as the person investing, the person buying, the person cutting the deal. And so I feel Harvey is serving a TAM that's quite large because there's, the legal profession is very big. I do wonder how much of like it is going to be it's going to be segmented out away from, hey, this parking ticket that I would have had to hire a lawyer for to figure out, now I can just drop it into do not pay. Hey, like I want to hire an employee, I can just, instead of having to draft up a whole legal agreement and an equities options agreement, I can just copy paste, blah, blah, blah. I think there's a lot more of that. And I think legal services end up being more commoditized, which drives price down.
Absolutely.
So we're partner. You and I are having senior partner meeting at our law firm, right? I'm like, Evan, we got to first of all, if it takes 2 weeks to do something, we got to do it in 2 days. Because AI's here. Like that's going to happen. Like we're going to trend towards things having to happen. Like our customers, our clients are going to expect us to do things faster because AI's there. But then also too, I'd be out there telling all the partners, you have to double the amount of clients that you have. Because whether that's going down market or moving into new verticals or something, right? Because there's got to be billable hour pressure. Like to Clint's point, I'm doing this too, and I'm sure everyone's doing this. They're either, to your point, Evan, things are going through these large language models and never ending up at the law firm to begin with. So they don't even know it's not coming because their customers aren't even coming to them. It's just going to show up in their revenue, the law firm's revenue, like in a year from now. It's like, where did all that little, singles and doubles revenue go? It's gone. It went to the large language model, right? You know what I mean? Also, too, I think a lot of people, like clients, before I even get on the phone with my lawyers now, I've done like an hour and a half of research. So I like to think I'm wicked smart on the topic before I even get on the phone with them. So something that would have taken maybe 2 or 3 hours of billable hours from that is only taken maybe 45 minutes because I've already thought through it and asked a lot of questions to the large language model, right? So
Yeah, I think you make a great point from the customer, like from the client perspective, right? If you're a lawyer now, you have to be a little bit more sharp because your client is going to be exponentially more educated on what they're asking for, the nuances. They're going to ask specific questions, so you got to be on your game. It's not like,
yeah,
5 years ago, 10 years ago, where like it was really like the client didn't know very much. They kind of leaned on the lawyer to be the expert on all of these things, and so that relationship, there was a real power dynamic there. I also think, though, on the inverse side, a lot of legal services today are very templatized. You sit there and you're like, I need to draft a formation of a business and entity in Delaware.
right.
And, your lawyer might charge you
Evan,
like $3,000
not
for
to
that.
interrupt.
But it's like click, click, click.
Okay. So that's the thing. It's like a template. I mean, that's the racket in legal, right? It's like a template, but then they charge you like they sit down at a blank sheet of paper and wrote it up from scratch, right? Which that's not what's happening. They're like maybe pulling it out of the file cabinet and changing a line or two, right?
For sure.
So just to wrap this up, I would not want to be in the legal business right now. I'm hearing of law firms like starting from scratch and they're AI first law firms. So they're literally saying like, if you work with us, we're a proper law firm, all set up properly, legally, etc., as a law firm. But we're telling you that the AI is doing everything, and then it goes to the human, and then it goes to you, right? That's like very compelling to me, especially, and like they're positioning themselves as like a fraction of the cost of a normal law firm. Like, not for nothing, I think a lot of people would go for that, right? So
that reminds me of my favorite quote about AI, and it's AI won't take your job, but someone who uses AI will take your job, right?
100%.
So it's really about the human leveraging the tool.
Lawyers are very good. The one thing I still think is like risk, especially like we're all financial services guys, right? I think risk is going to be very hard. Like risk assessment is going to be very hard for an AI to assess and take. I mean, we're all like entrepreneurs here. I don't know any AI that's going to be like, yeah, go ahead and start that business. Because like 9 times out of 10, you got to be an idiot to do this stuff, right? As an entrepreneur,
Yeah, the odds are against you. It'll see that.
Man, you're going for it. Like that's just innately like a human thing, right? It's like you're beating the odds. So like, risk assessment and management, I think is going to be something that humans will probably be doing for a long time. But everything up to that, even the inputs to decide whether you take the plunge or not, I think is going to be AI driven. And legal, man, I tell you, like, I think lawyers will be there to ultimately say, hey, should you do that M&A, or hey, should you kill that deal, or whatever. Like, that's nice to get the human's perspective, but all of the input leading up to that, I don't know, man. Like,
just wait, Aaron. When the AI can do a better job of psychoanalyzing the human and just understanding like how much of a masochist you could possibly be, then they'll say,
wrong.
They're probably going to go for it.
It's just the data. When
someone tells them no, they'll just try harder.
It's a function of data. You're not wrong. You're not wrong, Nick. You're not wrong.
Did you guys read the article in the New York Times about the reasoning models though, and how they sort of not plateau, but they have sort of like quality control has gone downhill a little bit? Have you guys read that article?
Yeah, just all about the reasoning side is very difficult to get over the.
Yeah, and I feel like for legal, that is a lot of it is interpretive guidance, and so I do think that there's still an uphill battle. Harvey at $5 billion is a very expensive company where I feel like a lot is still not known, and like the quality control. And I use it a lot, so I'm just giving you that perspective.
But listen, man, a lot of the revenue at a law firm has to come from like blocking and tackling type, associate stuff. Correct. There's a lot of billable hours there. And then also too, a lot of it is like educating the client on something, which I think people can now self-educate. So like, if you're a law firm and you're charging billable hours, like if that's, call it 50% of your billable hours is that stuff, that revenue is gone, right? Or significantly reduced from where it was in the past, which that's tough, man. So they're like consolidation, failure. I mean, like the list goes on. It's going to be super interesting. Ultimately, I think this is going to be with all things in technology. I think the great thing is a lot more people are going to get really good legal advice. Right. But I don't know if law firms are going to flex to be like, hey, we serve 1,000 customers today and we need to be serving 2,000 or 3,000 customers, in the next 24 months. Like I told my law firm, I was like, look, you guys should train a large language model on your own data and how you guys view the world. and I would pay you like a monthly retainer to have access to that LLM so that I could run contracts through there, and I could do this and I could do that. And that way, if I have questions, I could kick it up to a human. Like, give me a pricing tier thing on this,
Yeah,
right?
it needs to be an advisory contract. They got to move away from billable hours. It's got to be an advisory contract because you're paying for strategy. You're paying for guidance. You're paying for the tools and resources that they
law
have.
firms think like that. You know what I mean? That's like so foreign.
And they'll be disrupted.
That's kind of where I'm going. So look, I'm a big believer. I think Harvey, like the legal industry is, I think, well set up, to your point, Clint, at the open to be disrupted here. So, okay, so let's talk Wealthfront. So Nick, Wealthfront is for all intents and purposes, like a wealth management robo-advisor type shop, right? They confidentially filed for an IPO. They got $290 million in revenue. This place has been around for a long time. It's like 15-year-old shop, maybe longer, right?
Yeah, almost
20 years. But like, guys, like Nick, do you know their product lineup, or do any guys know the product line? My understanding is they have a lot of
direct
cash.
indexing. Yeah, that's where they raise a lot of money. They do a lot of direct indexing, model portfolios. You can even do your own portfolios. They have, it's really it was designed to be kind of the, hey, we'll take it off your hands and manage the money for the client.
But Clint, this is like
broadening out. It's Robinhood. It's a different version of Robinhood,
right,
without the gamification and self-directed. Think of this as the investor wants to hand it off on a digital platform. Modern portfolio theory, get a little higher interest rate on cash, and do some tax loss harvesting over direct index portfolio.
And yeah, I pulled it up. It looked like they had 80 billion AUM. That doesn't seem like a super big number. Like, is that correct?
Yeah, 25 basis points average fee. I don't know what they're making off the cash. Probably close to a point, because I think they're offering 4%.
Like, interest rates are high right now, and I bet a lot of that's in cash. Out of 80 billion,
that's why they want to go now.
Yeah, 80 billion, sneaky big, Nick. Like, that's like Oppenheimer and Co. I think has like 75 billion in assets under. Yeah, so like that's sneaky big. The thing is, I think most of that money's in cash.
That number felt very small to me.
Well, before 2008, not to date myself, but before 2008, like a $75 billion firm, and obviously that's like 20 years ago now, almost, right? So it's like a long time ago. But that like $75 billion firm was like a national wirehouse firm.
Yeah, but if they're doing the cash management, they're doing robo advisement, and they're not trying to put you in necessarily their own funds or anything like that. You compare that to any of the top 5, and it's dwarfed. So,
for sure.
Top 5 what? Top 5 what?
Asset managers. Yeah. Morgan Stanley, Merrill Lynch, the crew.
Yeah, those guys are you're not wrong.
That was my thought, but I mean, given that they maybe want to compare more towards, like an Adipar of this world, then they're big, So it's
I'd say 8 billion,
but it's different services.
Wealth firm is like top 25, top 30 for sure. 80 billion for sure.
Yeah.
Let's also add some context here. This company had 20 billion under management in 2021. So they went from 20 to 80.
That's the cash, right?
That's the cash. That's a massive growth. Second, the expansion revenue has primarily been on the 401k business. They've gone B2B. They figured out, hey, we can disrupt all of these massive, expensive 401k management companies and plan administrators who handle hundreds of millions of dollars and tiny little clients and payrolls, et cetera. And they're like, hey, we can provide a better experience. We already have a direct consumer play. Now we can go direct to businesses. They're getting all the startups. They're getting all the companies that want modern 401k plans. It's a massive growth.
401k plans, those small plans get their face ripped off on fees too, right?
Exactly.
So that should be sticky, right? If they're pulling it from Fidelity, but then you have, all of the we always talk about Rippling or Deal or JustWorks or any of the payroll agencies that assist you in parking your money with a 401k provider. I think there's a just all-out war there. So fair play that they can get that growth right now, but I think easy come, easy go as well. So
well, most of those payroll providers are not 401k plan administrators. They
correct.
they'll
refer
with
you to one, right?
So correct.
They partner with pretty much everybody. So yeah, I would not discount a 20 to an 80 growth. I just wonder if it's sustainable or if that's why they're going and running for the IPO as quickly as possible now that the window's open.
So Evan, do you like this do you like it's IPO? Do you think it's a good, if you were out there, not investment advice, right? But would this be something that you'd like take the plunge on?
There was a time when they were going to get acquired by UBS for $1 billion in 2021, I believe, and then that deal fell through. And then again, they had about 20 billion in management, maybe 25 billion. So now they're growing. The growth rate is quite impressive. I think. Look, it depends on how you want to value this company, on what multiple structure. Do you want to value it as a tech growth player? Or do you want to value it as an asset manager? I do think my personal philosophy for most mainstream investors is that the 60-40 portfolio is quite dead. I think that people need to be a little bit more aggressive on how they invest. I think people want more exposure in the types of assets they grow into. I think a legacy provider is not going to be able to offer that as quickly, which is why a company like Wealthfront can get in there and they can provide really interesting products. I think, Clay, you mentioned direct indexing, tax loss harvesting, things like that the modern consumer really didn't have a lot of access to. Robinhood doesn't offer that. Brokerage platforms typically offer that.
Good point.
And so I think that there's a big TAM and there's a big opportunity here for people who want managed portfolios. And I believe, especially on the retirement account side, there's a big opportunity there. It all depends on what the valuation is, which I didn't think the S1 had a valuation.
No, it didn't.
So I'm not sure. I can't give you a yes, no invest without.
I don't think they gave. So did the S1 come out yet? I don't think it came out. It was confidential.
I haven't seen anything.
Yeah. So this is what
confidential filing.
I want to make a bet. Okay. I bet out of that 80 billion AUM, I bet more than half is in their cash product.
That's interesting because I just pulled the last 5 years on the QQQ, right? And that's up 120 some odd %. So growing that in cash, that'd be really impressive,
But listen, they're doing the bank sweep. They're doing the bank sweep thing, right, Nick? So it's like, my bank Chase pays 2 basis points on the savings account and they pay whatever, 4%, right? And they're keeping the other 50 basis points and they got this huge payout because treasuries are so high right now, right? So Evan, what are you what's the bet? I'm saying 40 billion. I bet over half of that AUM's in cash. What do you think? Are you a yes or no on that?
25%. I'd say.
Okay, so high, but not 40. Yeah. What do you think, Nick?
I actually think 36. Looking at it, I think 36 billion AUM is in their advisory model.
Oh, they got it published. They got it published.
That's the latest data I see. Is 40 billion so roughly half.
That's a good line.
From what year though?
That was from 2022.
Yeah. Oh, okay.
So,
all right.
So let's assume it's grown. I don't know what the 60-40's done since 2022. I can pull that up.
I'm telling you guys, I think this is it's like quasi bank. As soon as rates drop, as soon as the Fed cuts rates, those assets are gone. That's why I don't know if you can buy this thing. That's what it's like revenue, which just but
you do have
plummet.
you do have Robinhood as a comp, right? And at the end of the day, Robinhood's trading at what? What are they trading at? They're trading at 23 times sales. Their enterprise value to EBITDA is at 53.
They got that crypto, Clint.
It's Robinhood. Not only the crypto too. They got loans now. They're doing mortgages.
They got everything.
I think you're going to see a big unlock in the mortgage market down the road. I think that's a good strategic bet as rates come down.
Fair point.
Curve's already inverted on the 3s, 10s. So you could add some ancillary business here. And they've done that in the past, right? But you can add a loan business. You can add some things to generate some upside. They've already added the brokerage aspects where you can trade your own account. Now you can get individual stocks. So what's going to stop them from adding a mortgage arm? I don't think much. And I think that would be, I think mortgage, there's a ton of disruption available in the mortgage market, and it's needed here. You've got $50 trillion in home equity that's left to be untapped. And let's say it goes down a little bit. That's a huge market. And I think it's a buy just from that aspect.
Too. People love Robinhood too, Clint. So I can see them going, if they are already a customer, why not use a Robinhood mortgage? Okay, so actually perfect segue, Clint Sorensen, because Robinhood has Kalshi. So you can bet on political events and other sporting events, etc. Right? But these two guys, Kalshi and Polymarket, are the two big ones, right? They both just did raises, right? So Polymarket's now at $1 billion, Kalshi's at $2 billion. Have you guys ever done this? I've never done this. I've like checked it out to see like who's winning elections.
For me.
Right, but I haven't pulled the trigger and like made a bet. Like, did you guys do? Anybody done this before?
I've used Robinhood's. Polymarket's not available in the U.S.
But isn't Robinhood's Kalshi? It's just Kalshi. It's like
Well, they actually use a different. They use a futures house, I believe, or some sort of contract.
Okay.
Something X as like the clearinghouse for the trades, but they also have Kalshi integrated along with a couple other firms. They're trying to be like a more of an exchange platform than like an offering platform.
Oh, that's interesting. Yeah, I mean, like, look, I don't know. I mean, Clint, I heard you were adding a 2 or 3% allocation to your clients' portfolios for this type of thing. Is that true?
I mean, we're a casino. We're just a giant casino. We're all in. Let's roll.
I love it, man. I don't know if I feel like how I feel about this type. I mean, gambling's a real thing. The full stop, man. Right? So, like, I mean, there's sports gambling now.
Look at 0 days to expiration options. The market's essentially
I was just going to say,
gambling.
Yeah, if you want to get some happy medium in between Kalshi and Polymarket to just traditional public equities, you've got the option market.
But that's true too. But what are the
option
big,
market
like,
is the market. Yeah.
I don't gamble. I don't do online gambling or anything like this. Like what's the big like sports gambling? Like what's the? Do you guys do any of this stuff or know any of the brands? I don't even know any of them. Right?
There's a ton of them.
There is a ton
like
of them.
DraftKings and
like DraftKings is the biggest probably, right?
FanDuel.
Yeah.
FanDuel.
Those are the ones. Yeah, this to me falls into that bucket. That falls into this kind of thing falls into that bucket as opposed to like investing. It feels more like gambling.
Is that because they're more emotional bets, right? Because you've got politics and sports when you're talking about FanDuel and DraftKings and Polymarket and that, whereas we're all talking about like the success of public companies or private companies, right? So it is a bit different.
I mean,
you're
it's
always
like
rooting for like your local team or something like that too.
No, you're not wrong, Clint. But I'd like to think that you could, like, with investing, stocks, bonds, etc., like you could have an educated opinion, on the fundamentals of a business, right? Whereas, like, I'm betting who's going to win the New York City mayor race. Yeah, like if I'm betting who's going to win the New York City mayor's race or who's going to, I don't know. I guess if you're betting on like, the Knicks game tonight kind of thing, or the Yankees game tonight, like you could have an educated guess on that too, suppose, right?
Look, I think it's interesting because we have not really ever had a market, like a live prediction market that is so vast and large with enough real stakes in dollars to matter.
Yeah.
And look, when you think about traditional gambling, sports gambling particularly, but those are highly regulated businesses and highly regulated like arenas in which you can invest into. For example, like, Pete Rose, like, banned from baseball, from betting, like NBA players can't bet, like, and then when you look at the financial markets, like the traditional financial markets, like it's like, front running and all the types of, trade attestations and things like that, trade approvals.
But
so
Congress,
they can
Congress.
bet.
You're
they
just
can
not.
Bet. But
that,
for this,
it's
just interesting because like prediction markets, I feel like are highly manipulatable, right? Like there's no like way to know like who's going to win them, like who's going to win
Are you buying for regulation? Are you buying for regulation? Is that a whiff of a call to regulate? Right?
I stand here to protect the customers at the end of the day.
I love it. No, man, I tell you what, if for nothing else, like the one thing that is definitely new about Polymarket and Kalshi is betting on politics, right? Which is fun. That's fun. I haven't done it.
Yeah.
But I love, like Nick said, I love to spectate and see what's what, right? I would rather trust this than polls. I'd rather trust, these real dollars at risk, right? Versus a poll, like you have, you know what I mean? Like an exit poll or somebody calling people, calling people up on the telephone and asking questions. Like this seems more real to me.
Right. And if there's enough liquidity and size, you can technically hedge, it's an imperfect hedge because if someone's getting into office and someone is not, and
like a
the
lobbyist?
person that's not,
like you donate to a super PAC and then you do the other side on the prediction market, like like that kind of a hedge. Is that what you're thinking, Nick?
you could take it that far, I would say, for sure. Why not? But you don't always know what people will vote for, when they're sitting in Washington. But if it's more likely to be an adverse effect, like try to make some money on them getting elected. And if they don't get elected, then fine. You just lost some polymarket money, but your positions are probably going to do better.
Yeah, fair point.
There's some balance that
You're
you
talking
can play
more
in there.
proper hedging, like proper hedging in the portfolio. I got you on that.
Yeah.
I don't know.
Smart, actually, that's really smart.
Yeah, that is smart. I mean, look, I love this stuff. I mean, why not? I'm a big believer. Let people do what they want, right? So like cow sheep, polymarket, you want to, bet on outcomes. Sounds great. Let it rip. Who am I to say not to do
More
something?
markets, the merrier.
Yeah, I mean,
unless they're manipulated, which is the risk, right? Like, and then people lose trust. You got to have trust in the markets. The best markets are deeply liquid, highly trusted.
I'm hearing balance
right?
from you, Evan.
And
That's what I'm hearing. Got to have balance, right? Right.
Well,
love
look,
the
I'm looking at
innovation.
polymarket right now.
That's right.
So there's a question here. It's like, will this nuclear facility be built by the end of 2025? Or will construction break on a nuclear facility by the end of 2025? And I'm like, wow.
In the U.S.
If I knew someone that worked at the commission and could, spend $1 million to get that to go a little bit faster, but put a $10 million bet down, it's like you can manipulate that. And in a world where,
you're not wrong.
sort of to what Nick was saying about politicians manipulating, and those who are in the White House tend to be quite comfortable, with financial engineering there for themselves. I feel like this could be heavily manipulated, which creates a dangerous precedent. I'm just putting it out there. I think it's interesting. I like the idea of this new data economy. Like that's what they talk about.
Regulation.
Access
I got it.
I do
Evan's
like
gonna run for local office and then throw it last minute and then make a whole bunch of money on himself.
Run for mayor of New York City. I would love that. Please do that, please.
You should. Maybe I will. Next election, I might try it.
I vote for you, brother. I vote for you. All right, man. This is good. Like, guys, let's end it there. Actually, let's put a Kalshi and a polymarket up if Evan's going to run for mayor. And what would that be? 4 years from now, 2030, right? Let's do it.
Yeah, you put $1 million in, and if I submit the application, I get it.
We'll pass the hat, right?
Get the signatures.
I love it. All right, fellas. I appreciate you guys. Thank you.
Thanks.
All right, man.
See you guys.
Cheers.